It's that time of year again when Tesla enthusiasts hold their breath and investors brace themselves, all eager to discover just how many cutting-edge Teslas will hit the streets this quarter. But here's the twist. This isn't just about the cars. It's about how those vehicles could power up your portfolio and accelerate your financial goals. Today, we're diving into the core of both innovation and finance as we explore the fascinating world of Tesla's Q3 deliveries and their heart-racing impact on the unpredictable stock market. Buckle up, because we're about to take you on a roller coaster ride through numbers, excitement, and a bit of stock market drama. But that's not all. Today's video features exclusive interviews with market experts, financial analysts, and Tesla insiders who will shed light on what all this means for the future. Will the stock take a triumphant tango or a cha-cha of challenges? Will the revenue figures skyrocket or quietly park in the garage? We've got the insights, analysis, and adrenaline to keep you hooked. But before we dive deeper, don't forget to hit that like button and subscribe to Tesla Stock News. This is the place to get the latest updates. With that, let's continue our journey. Tesla's Shanghai factory has been making quite a splash with an impressive delivery count of over 64,000 vehicles in July. This surge can be attributed to the ongoing upgrades at the Shanghai facility. Let's break it down step by step. This quarter's production and deliveries might shape up to be a significant event. As you probably know, my interest in Tesla is solid, and I've been riding the ups and downs of Tesla stock. So let's take a closer look at what's happening with the powerhouse that is Tesla's Shanghai. In July, the factory delivered an impressive 64,285 vehicles. However, had there been no upgrades in play, this number could have easily exceeded 70,000. But don't worry, those upgrades are all part of the grand strategy to fuel long-term growth for both Tesla and its shareholders. We all know Tesla is focused on long-term growth, and with the commencement of Model 3 production at the new Highland facility, the upgrades are undoubtedly a key factor. Looking ahead to August, I predict that the upgrades will be in full swing. I'm taking a cautious stance, estimating 7 days of downtime, although there's a possibility the upgrades could stretch a bit longer. This could have an impact on daily production, which is currently estimated to be around 2,500 vehicles per day. With that in mind, we can expect around 60,000 vehicles to be produced in August. September will likely maintain the momentum, with daily production estimates pushing us to around 75,000 vehicles. Now let's shift our focus to Fremont, where July saw 51,000 vehicles produced, despite a day off for Independence Day. August will likely see a production cut due to upgrades, with an estimated 41,000 vehicles for the month. September should bring in just over 49,000 vehicles, making for a solid 3-month production total of 141,000 vehicles. Berlin is also in the spotlight, having produced 25,000 vehicles in July with a daily production rate of 800. In August, I'm hopeful for an increase in production, with weekly output rising to around 6,000 vehicles. However, with the 7-day cut in August, we're looking at around 20,000 vehicles produced that month. September is expected to follow suit, bringing in another 27,000 vehicles. Over the 3 months, Berlin's contribution will be around 72,000 vehicles. Now, let's head over to Austin, where the excitement is palpable. In July, the facility produced around 22,500 vehicles, factoring in the day off for Independence Day, with a daily rate of 750 vehicles. August will see the typical production challenges, with upgrades trimming 7 days from the month. This will result in around 19,000 vehicles produced. However, September is where we can expect to see Austin ramp up production, with a weekly output of around 6,000 vehicles. After accounting for Labor Day weekend, this brings the total for Austin in September to nearly 25,000 vehicles. In total, Austin should produce around 66,000 vehicles. Now, let's tally up the numbers for a big reveal. If we exclude Shanghai's July figures, the total production from Tesla's major facilities is nearing 415,000 vehicles. Including Shanghai, that number might push closer to 480,000, but we'll hold off on those final calculations until more specific data comes in. With an impressive 95% delivery rate, we can expect around 393,918 vehicles to be delivered. Factory in Shanghai's July deliveries brings the total deliveries past the 458,000 mark. I know I initially mentioned 466,000 on Twitter, but after double-checking, the number is a bit lower. Nonetheless, it's still a remarkable performance, especially given the ongoing upgrades. Demand remains strong, with the average selling price projected to rise from $43,800 to $44,200. Why? Because the demand is real and supply is catching up. I'm also giving a nod to the Model 3 and its increased market presence. And while Q2 was a surprising quarter, I'm hopeful that Tesla will see a solid turnaround. Service, leasing, and vehicle gross profits are seeing a boost, thanks in part to the increased average selling price and other factors. Let's also take a look at the revenue numbers. Excluding credits and profits, Tesla's auto revenue continues to be strong, but energy revenue is also in the spotlight with an estimated $1.9 billion for Q3. The percentage of total revenue from energy remains steady at 18%, though there's a possibility it could rise to 19% by the end of the quarter. Operating costs, taxes, interest, and other factors still play a role in the final numbers, with a steady $450 million projected. Now, let's dig into the forecast for Q3. Tesla is expected to deliver 458,223 vehicles, a significant number. However, we may see slightly lower total vehicle revenue in Q3 compared to Q2 due to the temporary effects of the factory upgrades. The hope is that these upgrades will soon fire up production, allowing Tesla to churn out vehicles at lightning speed. The gross margin for the quarter remains steady at 18.2%, and revenue is expected to soar to nearly $25.5 billion. As for net income, Tesla is looking at an impressive $2.9 billion GAAP and $3.3 billion non-GAAP, which is great for the bottom line. The earnings per share, EPS, on a non-GAAP basis looks solid at 96 cents. Wall Street has whispered about numbers in the low 70s, but this could climb as more details become available. It's shaping up to potentially surpass Q2's performance, though there's a slight dip in total EPS, which might impact the stock price. Speaking of stock prices, Tesla shares are currently hovering around $250 with a P/E ratio of 71. If we apply this P/E ratio to Q3 results, we could see a dip in stock price to around $241, an intriguing level for savvy investors looking to capitalize on the market's fluctuations. There's even the possibility of the stock price dipping to $220 with a P/E ratio of 60, or even lower, into the $200s with a P/E ratio of 55. However, if the market sentiment improves with interest rate cuts and overall optimism, we could see the stock price climb back to $300 with a P/E ratio pushing 80 or 90. A more realistic estimate for the P/E ratio might be around 75. Looking ahead to Q4, this is where things could get really exciting. If the upgrades kick into full gear, we're looking at the possibility of 525,000 vehicles being delivered. Don't be surprised if that number edges closer to 540,000 or even 550,000. Q4 could very well be a game changer. We're aiming for a vehicle gross margin of 18.3%, reminiscent of the strong Q1 figures, and energy revenue is set to hit a cool $2.5 billion, with energy profits reaching a stunning $525 million. Now, for the grand finale of Q4, total revenue is expected to soar to nearly $30 billion, marking a strong finish for the year. Net income is projected to close out the year with a GAAP of $3.7 billion and a non-GAAP of $4.1 billion. The EPS is expected to hit a non-GAAP figure of $1.19, setting the stage for a bullish finish to 2023. Looking at the fiscal year as a whole, the EPS could land around $3.40, which would represent a substantial move. If the P/E ratio lands in the range of 90 to 100, we might see the stock price hover around $340. As we bid farewell to 2023, The realistic stock price range is likely to fall between $270 and $330 per share, with total vehicle deliveries possibly exceeding 1.9 million. Year-over-year growth from 2022 to 2023 stands at a respectable 42%, considering the upgrades and the shifting economic landscape. That's all for today. If you enjoyed this deep dive into Tesla's Q3 outlook, make sure to give this video a thumbs up. Don't forget to subscribe to Tesla Hub for more updates. Thank you for watching, and we'll see you in the next video.